What's up, everybody? Nate here. So the housing market is currently experiencing something that it hasn't seen in over 13 years. Mortgage interest rates for a 30-year fixed mortgage are currently staying at around 5.2%. That is the highest that we've seen since 2009. But right now there is a huge problem brewing in the housing market, and it actually comes from sellers that currently own homes. As interest rates start to rise, the theory is that buyers are going to naturally start exiting the market. This will leave more time for homes to come on the market and hopefully cool everything down. However, right now, that does not look like it's going to happen anytime soon. So today, I want to talk about what is going on in the housing market right now, and while our expectations might be in for a world of hurt down the road. But before I get into all of that, do me a quick favor and hit smash or destroy that thumbs up button below and ring that notification bell too. Both of those two things are completely free and they help to show me that you like this video and that you want to see even more just like it. Thank you so much for doing that. And now let's talk all about the big problem in the housing market. So this issue comes from sellers. We've thought over the past few months that as demand disappears, sellers would put their house on the market. In the United States, some people just need to sell their home, so they're going to put their house on the market. But the problem that we've seen over the last 2 years is every single home that enters the market is immediately getting bought up. Typically, home values in the US only go up between 1% and 5%, but lately they've been going up by 10% plus every single year. Now, to understand why that is, we've got to look all the way back to 2020. Inventory was starting to dry up in the early parts of 2020 as well, which seems pretty crazy looking back on it now. But back then, the Federal Reserve, in response to the pandemic, had to do something for everyday Americans. We weren't sure how long the pandemic was going to last for, so the Fed printed trillions of dollars in stimulus and dropped its benchmark interest rates down to 0%. This all helped everything in our economy because now way more money was circulating, and this definitely helped the housing market because you could get a mortgage at a historically low rate. So people started to buy up houses, and sellers were really incentivized because if they were thinking about selling their house before, now it was a sure thing. They could put their house on the market and just about anybody was going to be able to buy it. And initially this was great for everyone because housing prices hadn't exploded yet, so sellers could sell their house and get back in the market at a relatively low rate, and buyers could now enter the market and buy a home at, again, super low rates. That all started to change though in 2021 when not as many sellers wanted to put their house on the market and buyers were still buying up houses at a record rate. So now in 2022, the theory is that more sellers are going to put their house on the market, and the reason being is because this might be the last chance they get before interest rates really take too many buyers out of the housing market. In March of 2022, the Federal Reserve announced that they were going to be raising their benchmark interest rates by 0.25%, and in May of this year, they said they were going to raise their interest rates again by 50 basis points. That means interest rates are now around 0.75 to 1% in the United States, which means housing mortgage rates are also going way up, the highest we've seen in years. Naturally, not as many buyers are going to be able to buy a house with mortgage rates going that high up. The way you're able to afford a house is based off your monthly payment, and with that interest rate being so high, you simply can't afford the monthly payment. Not to mention, home values continue to go up because some people are still buying houses out of FOMO. The fear of missing out has meant that millions of Americans still want to purchase homes, even if it's pushing their budget way to the edge. Banks are even encouraging this because they want to squeeze every last drop they can out of buyers in this housing market. They're basically saying, well, that's the housing market of today. If you want a home, that's what you have to pay. So that FOMO is pushing Americans into getting a house because they feel that affordability is already subpar, and if they don't get a house right now, they are never going to be able to afford one. But the interesting thing is it's not happening on the other side. You'd think that sellers would want to put their house on the market right now because if they're interested in selling, this is the time to do it. If they don't do it now, then prices and values are going to go way down and they're never going to want to sell their house. Well, here's the big issue with that logic. 51% of all Americans who currently own homes bought within the last 2 years or so. This means that they got into a housing market that had historically low interest rates. We're talking 4, 3, and right around 2%. Most Americans are never going to see that low of an interest interest rate again. So they're asking themselves, if I was to sell my house, what am I going to do next? You see, the problem with the housing market right now is sellers don't want to put their house on the market because they too have to then go out and buy a house. Housing prices are crazy and they don't want to be a buyer in this market. And with interest rates going up, it's going to be really difficult to sell anybody on a house because they're going to have to pay a lot more. Sellers don't want to become buyers because housing rates are going way up. So right now, the housing market and its continued hot streak is relying on two major things. If it doesn't see these two major things, then it's eventually going to have to come down in 2022 and beyond. The first is your old home buyers willing to put their house on the market. So this is people who have not purchased houses over the last 2 years. It's pretty clear that recent home buyers are not willing to put their house on the market. Even though most home buyers have regretted buying a house over the last 2 years, most are not willing to take a huge loss on their property. And number two, we're relying on the Federal Reserve to continue to raise its interest rates. Now, the Fed has said that it wants to raise its interest rates around 4 to 5 more times in 2022 and multiple more times in 2023 and beyond. The Fed has said that they want to get aggressive with inflation and raise rates around 4 to 5 more times in 2022. They want to raise rates more in 2023 and in 2024 as well. As the Federal Reserve raises its interest rates, that's going to mean demand for everything in our economy comes down. Americans are going to spend less on credit cards because that credit card interest is going to go up, mainly because credit cards come with an adjustable interest rate. Mortgages and auto loans are also going to be a lot harder to come by because most Americans simply can't afford it. The Fed has only been raising interest rates for a couple months now, like I said, since March of 2022, and we've seen rates go from around 3% all the way up past 5% in this short time. That's because as the Fed raises its rates, it's a lot harder for banks and financial institutions to get money. So the Fed doesn't actually directly control what mortgage rates are going to be in the United States, but banks get their money from the Fed. So if it's harder for banks to get their money, they're going to make it a lot harder for you to spend theirs. Now, the Federal Reserve has all of these plans and they want to continue to raise interest rates, but the problem is they might not be able to do that. Most investors and experts are worried about a coming recession in the United States. Those fears were just amplified based on the Q1 GDP results. The United States economy actually shrank by around 1.4%. Now, you technically need 2 quarters for a recession to happen in the United States. So we won't know if a recession is actually here until probably the end of the summer. The Fed believes that it can start raising its interest rates because unemployment numbers are good, job postings are positive, and the pandemic and our supply chain issues are starting to disappear. This all means that our economy is in a really good place and Americans still have a lot of money to spend. Consumer sentiment is up, and according to Bank of America, so is consumer spending. So even though inflation hit an over 40-year high of around 8.5% back in March of 2022, we are still seeing consumers spend anyway, which is a good sign for our economy in general. Eventually though, if inflation continues to go up, then that is going to end, and the Federal Reserve at some point is going to have to backtrack. That assumes that they could make a mistake and get too aggressive with their monetary policy, which is definitely possible in 2022. If this was to happen, like I said, the Fed is going to have to start decreasing rates, which could make the housing market become hot again. Here is what the future of the housing market in the United States looks like under our current conditions. Now, this could obviously change depending on what happens across the world and what the Federal Reserve decides to do here at home. If the Federal Reserve continues to raise its interest rates aggressively in order to bring down inflation, well, the housing market is going to get hit hard. We're going to see home buyer demand come way down, while inventory isn't really going to rise because nobody is willing to put their house on the market right now. One of those things is going to have to give. You can't have super low demand, and you also can't have super low inventory. That's basically going to mean that homes have very little value. Nobody wants to buy one. And if we start to see home inventory outgrow home demand in the United States, that's going to put the housing market in a really bad spot. A very similar spot to what we saw during the housing crash of 2008. Now, what exactly could happen that would make inventory rise in the United States? Well, there are so many new homeowners in the US right now. Like I said, 51% bought over the last 2 years. But a lot of these homeowners have regret. Most of them are not going to be willing to put their house on the market, but some will. If you couple this with the number of homeowners that didn't buy over the last 2 years finally putting their house on the market, well, that could improve inventory a little. And as demand comes down, you're not going to see a housing market crash. In addition, those new homeowners may have underestimated the costs associated with owning a home. There are all of the repairs and all of the maintenance and, of course, taxes. With property values going up in the United States, so are property taxes, meaning you could end up paying an extra $100, $200, and $300 more for your home just for living in it. This is something that's going to happen every single year, and many Americans can't afford it, which means we're going to see foreclosures increase in the United States. As more foreclosures start to grow, home values will start to come down as well, making homes a little bit more affordable and making demand go back up while interest rates go up as well. And that's an issue if interest rates get way too high, because if they do, well, then Americans are not even going to be able to afford these discounted price homes. So if we enter a situation where nobody is able to afford homes in the United States because interest rates are just way too high, even though home values are coming down, this could mean an even bigger price discount for all homes that are currently on the market, because inventory is starting to rise as foreclosures and home sellers simply can no longer afford their home, and foreclosures start to rise too. The Federal Reserve is going to be in a really tough spot here, because if our economy is doing really well, then they're either going to have to backtrack their policies or they're going to have to double down and continue to raise rates. That all in itself could lead to a housing market crash. But here's the good news. The good news is, even if the housing market does go into correction territory or crashes in 2022, it will eventually recover. As home values start to come way down, eventually more Americans will be able to afford those homes. Mainly because as the years go on, wages will start to increase in the United States, so people will have more money to spend and home values will be really low, making homes valuable again because more people want to buy them. As more people want to buy them, the supply will naturally go up because people know they can again put their house on the market and somebody will buy it. But in the short term, I believe there's going to be a period in the housing market where you have very low demand and also very low supply, making home values plummet in the United States. That's not going to happen right away, but it's going to continue to get worse and worse as interest rates start to rise, inflation goes up, and home affordability goes out the window. So it's something that I expect towards the fall. So this summer is going to be really hot, but by the end of the summer, we are going to see a freezing cold housing market. But now I want to hear from you on this issue. What do you think about the housing market essentially plummeting in 2022? Do you think that there's kind of a perfect storm brewing in the housing market right now, with the Fed raising interest rates and buyer demand coming down, while at the same time sellers are refusing to put their house on the market? And is that all going to lead to a housing market flip? Whatever your thoughts are, leave a comment below before you go. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all of the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world, I'm putting out updates 7 days a week over here on this channel, and I've actually got another one ready for you right here, so be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.